Hey, everybody, Tom Gentile. Welcome to our midday report. It's Monday, August the 10th, 2020. Glad to have you here. Check in with me real quick and tell me if you can hear me and see me on the screen. I wanted to do the dual screen thing like I did last week, but I'm getting a little bit of a blue haze on my Bloomberg screen. And let me just show you what I'm talking about here. So I'm flipping this over. You can see the news that's happening. And we see stuff like technology shares are slumping. There's a disconnect right now between what's going on the Dow and S&P and the NASDAQ. And, you know, those particular indices have really widened apart for quite some time. But that seems to be the big news story. Robinhood blows past rivals in a record year for retail investing. That would make sense because they're one of the most intuitive investment platforms on a smart device. I think you've got McDonald's is accusing its ex-CEO about lying about office relationships, the one that was that left last year. Of course, oil is now rising. We'll take a look at oil. Apple's iPhone sales are seeing strengthening recovery, and I think I know what everyone's doing with the stimulus checks these days. Anyway, that's just a couple of things that we kind of see happening on the horizon. I wanted to just check in real quick and see what was going on with the Bloomberg terminal. Let's talk about what we're going to cover today, and to do that, since we are ready to rock and roll here, let me find the next switch that I need to hit here so that we can talk about what we're covering today in this half hour time together. Here we go. Let me share this screen with you, and away we go. And so, again, welcome to the program, guys. We're going to talk about stocks, bonds, currencies, commodities. We're going to, and I'll touch on GLD. I did a really nice video on GLD last week on Friday, and I'm going to post up. Here you go. There's the address you can get to see that video. I don't have time to cover as much as I covered in here, but take a look at it. It's on youtube.com/Tom's Trading Room. If you subscribe, you'll get all the videos immediately as we upload them. I'll be doing another one tonight based on a little bit more detail, based on something called holiday patterns, which is what we're going to be covering today. So we will cover holiday patterns coming into the day, but anyway, guys, that is the plan. So market news and technicals, big payday stocks now. I want to cover that too. And also something I'll call Labor Day buying patterns. All right, buying patterns that are happening right into the next U.S. holiday that we have. So let's start with, well, I already showed you market news, and you guys kind of see what's going on there with the news. We're seeing it's just starting a continue to move up in the Dow, a bit of a pullback in the S&P and a larger pullback in the NASDAQ. But here's the SPY. This is the S&P 500 ETF. Couple things I want to show you. So since we talked last week, we saw the S&P now move up above 330 and moved up to 335. 340, that 338 area, that is the all-time high for SPY. I think we're gonna hit that. I think we're gonna go through it, and I think all of this is gonna happen during the rest of August into Labor Day. We have about 20 days, 20 trading days before we are sitting on the first Monday of September. All right, so let's think about, as traders, and look at patterns that are happening in the next 20 trading days, and of course, what to do about them. So SPY is trending up. That's great. It's in an uptrend. All right. Let's move along and see what's going on with the bond market. Bond market had been trending up for quite some time, moved as high as 172, and that was out there. You know what? Let's put the big one on. There we go. A little bit bigger. You know what? Let's make that even bigger. Let me go to my settings, and let's increase the size of this mouse. Now we can see. So 172 drop down. This was a drop down into June, down into the 150s. We've rallied back, all right, into the and cracked above 172. Last couple of days, we've seen, this was Thursday, Friday, today, we're seeing a pullback in TLT. That's fine. That's fine if you're a stock buyer. That's exactly what you want to see. How about cash? What's the cash market doing today? Let's go to UUP. You can see the US dollar double dollar index, which was trading in the high 20s. That was back in April and in May, broke down below the first support level at 2680, made a new support level down near the 2580 area. Well, that broke that last month back in July. We rode that down to a new low, which is just at 25 before popping up. But wait, there's a little bit of selling pressure coming again in UUP. Stocks up, bonds down, cash down. Well, there's only one more thing that could be creating what we call that perfect move to the upside, and that would be if we see commodities going higher. Here's USO. Now, USO, again, this was the turbulent times back here when oil was, when you were being paid $40 to take a barrel of oil with June delivery on it. All right, since then, USO reverse split. So now the new reverse split low is around 17.5. Since then, we've seen oil start to move higher. We ran into some resistance up here near the high 20s, and this hung on for a while. This hung on from the month of June into the middle of July. We popped up to 30, and now 30's become a problem, but 30, we are back again at 30. So it's trying its best to crack and stay above 30. And so if it does that, 30 will no longer be resistance. 30 will be support. Okay? So that's what we're looking at for USO. USO, typically what happens, guys, if you look at patterns like I do, you go back 10, 15, 20 years with oil, it typically peaks in July. However, this is a little bit of a different scenario we got going on here with oil because of COVID-19. Because COVID-19 took out the February to July pattern, which is typically higher, we now see that pattern shifted. And that pattern shifted from May, and we believe that pattern is going to go from, we're really, that May area shifting into September. So if that's the case, oil should continue to trend higher. Another thing I want to let you know is that if you take a look at news, all right, we are now coming out. We are pretty much done with Q2 earnings. You'll still hear earnings coming here and there, but the swelling is gone. And let me tell you something that I've learned on the street. No news is good news when it comes to Wall Street. So we've got a lot of things kind of happening here. We've got money being printed by the federal government. Again, now we're getting a short-term stimulus package that pushes us to September, right? That's good for stocks, bad for cash. That's number one. So the fundamentals look good. The overall global fundamentals look good. Number two, if you look at corporate fundamentals, most of corporate America, and I'm looking really at the S&P 500, well, most of the S&P 500 actually outperformed. They ran above the limbo. Okay, you know the game, the limbo, where you limbo underneath the bar, and you don't touch it, and if you touch it, it falls over, and you're out. All right. Well, the market's been playing a limbo game. I like to call it a reverse limbo, and the reverse limbo is where the bar is lowered. And if you exceed the bar, you're a winner. And that's what's going on with corporate America right now. The bar has been lowered for earnings and revenue, and they've been beating that bar, and that's helping out as well. And finally, you look at the technicals in stocks, bonds, currencies, commodities, and they all look like they're pointing to more upside for the stock market. Let's move on. Take a look at gold, my favorite of all of this. And we're getting some volatility, and it's not surprising to me, because of this melt up that happened, or this smelt up in gold. The smelting of gold took GLD from 170, which for a good week or so, week and a half, we traded along that 170, and all of a sudden it's all the way up into 195 before pulling back. We're above 190 right now. We're trading in the 192 area. Where's the real support for GLD? Until we see some more time action, we see some more price action and more time, I'm going to have to say the support level's at 185. So we could see this pullback into 185 here for GLD happen. All right. How about our other favorite stocks as we move forward? I'm just going to hit it real quick here. Let's go to Facebook, coming off of yearly highs, all right, that just occurred on Friday. Apple, coming off of yearly highs that occurred on Thursday. Amazon. Well, Amazon hit its yearly highs back in July, but it's gone ever so close to hitting them again, but we're starting to see a little bit of a breakdown. Amazon has support now pegged at 3,100, and that is basically weekly support from the lows that occurred last week. Google. Now, Google's got some support down here just above the 1450 area. We're going to call that about 1460 on Google. Google was coming off of yearly highs about the same time Amazon did. This was back in the middle to the end of July, and that was where Google was trading above 1575. Google right now, 1485. Had been lower today, but remember, that support's going to be weekly support down there in the high 14s. Tesla. So went through the FANG stocks. Let's talk about Tesla for a moment. I had to add that to the list, and Tesla is sitting on weekly and even monthly support levels right around the $1,400 mark. Again, it was not too long ago, Tesla was trading for $1,800 a share, and then it fell off in dramatic fashion. This was back in mid-July, where we had a range day where Tesla had gone from around 1,500 to 1,800, or 1,800 to 1,500. Big range day for Tesla. It's had a couple other range days where we've seen it exceed 100 points in a day. All right, those came also in towards the end of July. But keep an eye on this area, because if we break down here, we could see Tesla's next support level back down here around 1,000. All right, so it could garnish some move there. Now, I mentioned stocks up, bonds down, currencies. We're heading in the right direction. Commodities heading in the right direction. But the one area that's getting hit a lot, and I'm going to put this up on right now, is let's look at the NASDAQ, or QQQ. QQQ symbol. All right, now this doesn't look like it's being hit really hard, but if you look at it and you weight it against the Dow or you weight it against the S&P, it is outperformed to the upside. So it doesn't shock me at all that when we see some downside action, that it's going to underperform to the other indices that are out there. All right, so let's now talk about big payday stocks. And I want to talk about paydays, and what are paydays first. So paydays I'm talking about are in options, and when I refer to a payday, I refer to implied volatility, or options implied volatility. So what is options implied volatility? Well, it gives us a gauge of how cheap or how expensive options are when we're looking at them over a course of time. So let me show you once again what that looks like, because I have it on the screen right here. So take a look at QQQ. Back in April, QQQ, and we express and we rate volatility in a percentage. There's a number over here to the right-hand side. That is a percentage. So if you take a look and see back in April, that percentage, this red line, shows us short-term options. We're trading at a level of 46. And then look at June. They dropped. So what happened was options on the QQQ, on the Qs, dropped as the Qs were moving higher, because what happened was everyone started to wake up from the fear of the pandemic and realize, wait a minute, technology is going to do just fine. So as technology climbed, options, the fear of technology falling, fell. And we saw option prices. When you look at this, you say, what does a 46 mean? It has to do with standard deviations. It has to do with a probability that the stock's going to stay in a particular range. But here's the way I want to explain it to you. When you go from a 46 to a 22, all right, what you've basically done is your option premium is now half of what it was. It's now half in June of what the same 7 to 30-day options were selling for back in April, all right? Option premiums half off. Where are they today? Well, we're trading at a 26. Why have we popped up? Because the market's starting to show bigger moves, not only to the upside, but to the downside too, which is suggesting that volatility could be coming back in technology. Now, when I look at big paydays, they tend to pay out the best premiums. So guess what I look at when we're talking about paydays? Selling options. And selling options does involve risk and obligations of stock, either long stock if you sell puts or short stock if you sell calls. So the reason I talk about this is we could go through stock after stock after stock here on this program. Problem is we don't have the time to do that. So let me just show you the ranking that I did in our option tools. This is tomsoptiontools.com. And we have a way of going, and within a couple mouse clicks, I can go find out which stocks and which options are the highest in implied volatility right now, the highest in option premium. And as you can see, silver, SLV, the poor man's gold, number one on my list, meaning that where it's been, the highest, the most expensive it's been, the lowest it's been in the last year, and where is it right now? So it's trading much, much closer to the high than it is the low. That's what puts it at the top. This tells me what it's done in the last 24 hours. Alibaba, same thing. Its high was 61, its low was 22, and right now it's trading at a 48, right? Jumia, 354 on the high, 73 on the low, 207 right now, right? So JMIA, very expensive options. And then you just kind of go down the list. Here's another ProShares Ultra Silver. Here's a physical silver share. I mean, 3 of the top 10 are in silver, are in precious metals. So what can we do about this? Well, we can, if you like the chart of SLV, let's take a look at an SLV chart right now. So again, spot the opportunity, SLV. Now, what's SLV doing? Well, it's going higher like gold. This could be a longer term pattern that we're seeing in silver, right? So if I see a long-term pattern in silver, is there anything else going on here that I need to be aware of? Let's turn off some of these, let's turn off the moving averages. We know they're separating really well. We'll update this. All right, so I got look at the implied volatility. See how high this is? This is telling me that even the short-term stuff's high. What about the rest of this? Let's take a look at, let's see. Let's look at the medium, the 60 to 90 day. That's going to show me a different, even that's expensive. So you can see options across the board have gone up with the price of silver. I don't want to go out and buy SLV right away, but I'm happy to sell put options on this as a long-term investment. Well, this is how I would do it. Now, what I'll take a look at is we'll take a look at the options on SLV. So let's do this. Let's go to options. Let's go to the chains. Let's go ahead and type in SLV. All right, so that's where I'm going to go, SLV. And that'll update now. Now I'm looking at SLV and I'm looking at the August 14th. Let's just look at the August 21st. And you know what else I want to look at? 1, 2, 3, the third Friday in September. Going to update this. Now, I've got calls on the left, puts on the right. Let's go into the puts because I'm looking to sell this high implied volatility. And I want to see what I can get for this. So right now, stock's trading at 26.84 roughly. The 26 half puts are trading for $1.28. That means that I can sell this put and be obligated to buy SLV by the end of next week at the strike price of 26.50, and I'm going to get paid somewhere around $1.27, $1.28 to take that trade. Maybe that's maybe I want to go out a little bit farther. Maybe I can look at the 25s. The 25s, if I sell the 25s, I'll get 65 cents. But again, I'm now obligated to buy SLV at 25 if I do that. All right. Let's take a look at September. So I'm going to come down. These are the August options, August 21st. Here's the September options. These are 39 days to expiration. The ones we were looking at just a moment ago, 9 days to expiration. So if you look here, you can see that the 25s are trading for $1.57, which means I could sell. But again, if I sell for $1.57, I've got to wait 39 days to either take the majority of that payday, or take the payday and take the stock, because that's one of the two things that are going to happen. So I'm going to come up here, and you know what? I've got some long-term stuff on gold. All of you in this room that have been following me for a while know that I love gold. All right, but I'm going to show you the poor man's silver way. So we'll look at silver, and this is and guys, by the way, I'm showing you how I do this. This is not a recommendation. All right, but if I were going to look at purchasing, if I wanted to purchase silver, and I were to look at maybe that chart again and say, all right, you know what? What's a good price to purchase silver just for the next couple weeks? Really, this thing's popped up above 25. Looks like a great area. So if I want to pocket, let's say $650, all right, and the reason I know that is because I go back and I see what that 25 put's selling for, 64 by 65. So if I wanted to sell, let's say I sold 10 of these, right? What's that going to do for me? That is going to let's hit the risk graph. There's what this is going to look like. So I'm going to put $650 in my pocket, but I could be obligated to come up with $24,350 in cash if silver goes down and I end up acquiring silver at that price of 25. That could happen all up to August 21st. So until next Friday. All right. So here's what I'm going to do. I'm going to go. I've spotted an opportunity that I already have in gold. So all I'm doing basically is I'm averaging into precious metals, just doing this. But I'll show you how this works. So I spotted the opportunity. I want to create the low risk trade. So to create the low risk trade, that would be, in this case, this is more of a high probability trade. It's a risky trade because, but so is buying SLV. I'm just showing you how you can buy SLV cheaper than it is today and get paid to do it. That's basically what we're doing. So we could buy SLV, and to do that, I just then move to my my ticket, my broker's platform, and I'm going to type in SLV. I'm going to say, all right, well, what's that put trading for right now? So if I go in and I were to sell to open 10. And by the way, I'm being told I can't do this on live with you guys, so I apologize. I'm going to show you how it's set up. How about that? So if I were to sell to open 10 of those 821s, 25 puts. Right now they're trading 59 by 60. They dropped. Well, how am I going to get 65? I want 65 cents for this. What you do is a limit order, 0.65, right? I could put that in as a day order, which means if I get filled today, great. If I don't, it's canceled. Or I could put it in as a good till canceled if I wanted to do that. That's another way you could do this if you want to stay in there, for have the order in for longer than a day. And then it's just a matter of previewing the order and then placing the order. All right. So spot the opportunity, create the low risk trade or high probability trade, plan, execute, manage the trade. What I would do with this is I would simply look at this as a longer term investing strategy. And my plan would be hoping that I would get the stock. But if I don't get the stock, I get the payday. I get the payday either way. I can get the payday with the stock, or I can get the payday without the stock. Okay. And again, I'll mention this. This, if you want some more details on what I think about precious metals, etc., I did a YouTube video on Friday explaining just that. All right, that and more, and I'm going to put the link in there one more time for those of you that came in late. That's youtube.com, and then of course, if you subscribe, if you want the channel, it's youtube.com/Tom's Trading Room. All right, finally, let's move over and look at holiday patterns. So I will be doing my next video, a detailed video on holiday patterns, because we want to think about the next 20 days. There are 8 major holiday patterns that I track stock and indices on. All right. So originally the pattern is, you guys have all heard this. The pattern is, let's just buy a stock because the holiday's coming up. All right. And which holidays are we talking about? We're talking about, for instance, Independence Day, all right, July 4th, Labor Day, Thanksgiving, Christmas. You've got New Year's Day. You've got President's Day. And so these are all part of my holiday pattern strategy. And they started off as a strategy. I didn't make this up. Okay. I didn't come up with a strategy. So I have to give kudos to the folks who did, who looked at patterns a long time ago. And I'm talking about the Hirsch family, the ones that create Stock Traders Almanac, Jay Capel. You know, these are guys that have been looking at these seasonal patterns much longer than I have, especially Hirsch. Yale Hirsch is who I'm talking about. But if you take a look at these patterns, what I did was simply build a tool to determine the absolute best day to get in and the best day to get out. And I like to call it dynamic seasonal patterns. So let's go back to my screen and let's look at dynamic seasonal patterns, and you'll see exactly what I'm talking about here. All right. So here, let's go over and let's look at major holidays. Oh, so what I'm doing is I'm basically going into my tools again, and you know, these are my patterns, and I've got patterns on weekly trades. I've got holidays. I've got the money clock, which is a day trade, intraday patterns. I've even got patterns on cryptocurrencies, but and of course the money calendar. But today we're going to go into the blue button. That's the money holiday button. And the money holiday button is going to look like this. Let's go in and take a look at it. So I'm going to go to up here into, let's go home. Let's go home. And what I'm going to do is I'm just going to show you how I roll in here. So here is the money holidays button, and I'm there. All right. So now, in order to populate this big white screen here to the right, I've got to enter a stock. SPY. Right, you're going to love this, guys, because we're going to finish up on this, but not SPY. Okay, last 15. Let's do the last 15 years. I have an upwards of 20 years of data. Let's go 20 years. Now there are 20 days before what holiday that's coming up. There it is, Labor Day. So I want to look at so follow along with me here. Let me blow this up where you can all see it. There you go. So SPY, 20-year look back. What happens on Labor Day the 20 days before Labor Day? I want to know what happens. Do we get a lot of buyers? Do we get a lot of sellers? Or is there a lot of inconsistency? Blue is good because blue tells us that in the last 20 years, and this is all ranked by average percent return. So 17 days before and 0 days after over the last 20 years, SPY has gone up an average of 1%. Okay, with an 80% accuracy. That means that 80% of this pattern going back is positive for SPY. Right? So we could take a look at that, and that automatically tells me, and let's think about this. What does it tell me? It tells me that going into the month of August, as we roll into August, no news August. No news is good news August. And it shows you, and we're seeing that right here on the graph. All right, so last 2 weeks of August, first coming into September, looking good. How about, let's take a look at something else. So let's take a look at USO. How does oil react? So now all I'm going to do is I'm just going to change the symbol. Let's see what it's telling me here. Well, I have 11 days before and 0 days after, a 78.57% accuracy on oil. All right, last 20 days. This is going back 14 years on USO. Now, I think USO might be a little skewed, but that's okay. I want to show you one more pattern as we end out our session. GLD. So GLD right now is fundamentally strong because the US dollar is falling. It's technically strong because it's broken out and it's in an uptrend, right? But is it seasonally strong going into Labor Day? Let's submit this. Let's see what we get. All right, that just tells me it doesn't have 20 years, but of the last 15 years of data, 19 days before, we have an average run-up of 2.15%. Now, I can go in and take a look at this in a little bit more detail. Let me show you what I'm talking about. Let's make some space on the screen. I'm actually going to click on this top line. Here you go. So here are all the green are the years that this pattern was working. The red was the years the pattern did not. So if I look at the worst, which was 2008, you can see what happened. GLD was at 87. It dropped down to 78, and it ended right here around the 82 area. The best year that this pattern worked was 2013, as GLD went from 124 to as high as above 137 to finally come back and end the pattern at just below 135. What did it do last year? Well, last year we went from 138 to as high as 145 and change before pulling back to just below 144. All right. So as you can see, I've got a lot of data. Right. You know, I mean, the fine folks over at Money Map call me America's #1 pattern trader. Right. I can tell you this. I got a lot of data to look at a lot of different patterns. And I just showed you a new one today, guys. And so what I'm showing you is I'm kind of building a case for why I like gold and why I like precious metals, at least going into Labor Day. So as I end out the session for all of you, all right, keep in mind, what have we done here for this particular session? We talked about stocks, bonds, currencies, commodities. We talked about big paydays, and I looked at silver because silver, and of course gold's up there too, but not as high as silver. Silver is showing us right now that there's so much volatility in precious metals. I'd expect to see higher, big dramatic moves up and down continue. Okay, these moves up and down, I'm expecting volatility in precious metals to continue. But when I look at the patterns out there, the technical patterns, the fundamental patterns, and now finally the seasonal patterns, it tells me that we do have more potential room to run with these particular patterns that you're seeing here, guys. All right. So that's it for me for today. Thank you very much for joining me. I'm sure that the folks over at Money Map Press, my publisher, will get this archived and you'll have access to it if you want to look at it again. Also, check out my video series, youtube.com/Tom's Trading Room, if you want to see a lot of free videos that are out there where we do the same thing we do in here. We spot opportunities, we create low-risk trades, and we plan, execute, and manage those trades. Thanks for joining me, guys. Have a great rest of your day. I'll see you next week. Bye now.